Man, oh man. Yeah, man, on this next rally that we get, you should probably go big time short because there's really no other option other than to break the highs, which is likely not going to happen. Man, oh man. What a fucking day. What a day, guys. This is crazy. Y'all don't understand. So I sent the charts earlier this morning that kind of explain what my thesis is, but I'm going to go just very quickly and briefly through this wave count. Originally, before we had yesterday, I was aiming for only this wave 3 extension down to here at 373.46. That would have been the modest reaction, okay? But when we got that rally yesterday, it invalidated this count. This count could no longer exist. The reason being was because when we were coming down here, okay, the way I was counting it when I was thinking this was going to be our target, it would invalidate that count. So basically, what I'm telling you guys is that since this count got invalidated and that this is no longer valid, the count of this being 1, 2, and 3 coming down to here is no longer valid. This can no longer be wave 1. The only possible counts that are now even, if you wanted to say bullish, it's still bullish and you're trying to be optimistic. The only possible way it can go back up is if it breaks over the all-time high, which is just simply not likely in these economic conditions. There's no reason that we would move back up. The debt crisis has not been resolved, the treasury yields have not been resolved, and the tariffs are still going to go into place 90 days later. So there's nothing that would assume to us that we break the highs. Okay, so now at this point, since we invalidated this wave count, we need to come down and we do wave 1 here, wave 2 here, or I'm sorry, this is all wave 1. And when we finish this wave 1 here, we then rallied here to do wave 2. Okay? Now, typically, what you would expect is a 50% move on wave 2. Okay? You'd expect that 50%, and we got nearly there. We almost got to that 50% mark. So, for that reason, I was thinking that this morning we were going to do some sorts of retracement here and that we would continue going higher and get to that 50% mark. Okay. Now, if we zoom in here, that would be operating under the assumption that this coming up to here was wave 1, and then down to here was wave 2. Okay. And then from there, we went up for 3, and we were going to pull back to 4 here and then rally and break these highs here for 5. Okay. And that could finish your wave 2. Okay. Coming down. However, since we now have broken today, these double top highs, that can no longer be a valid count. You can no longer say that this is wave 1, wave 2, wave 3, wave 4, wave 5, because wave 4 would come into wave 1. So that does not make sense. So that no longer can be a valid count. So that would imply that there is no other way that we go higher. I guess the only other possible way, if I was really trying to just at all costs say that we're going higher is if this is A, this is B, so A here, 1, 2, 3, B, and that this was 1, 2, 3, 4, 5, C. Okay. Um, Actually, I'm sorry, that wouldn't even make sense. It would be 1, 2, it would be 1 A, this would be B, and then C would be 1, 2, 3, and that this is still 4 because we have not broken these highs. So that's still a possibility. Okay, we still could rally and break these highs here, and then you could get to that 50% mark. Okay, so that's still possible. However, it's also possible that we just have a truncated second wave, which did not make it to the expected move because of how violent and volatile this market is. And the way it's starting to shape out here, the fact that we gapped down and went, is starting to show people that we are very bearish. Okay. The fact that if we retrace all of this today, and right now we're down 5.75%, if we go the full 7% for a limit down today, then it'll be almost certain to a lot of people that we are not going higher, especially after we got the pause news yesterday. Okay. You can see that Apple's down 6%, Nvidia's down 8%. And so this would all just fall underneath the guidelines of being a dead cat bounce. Okay. So let's assume that this market has now started a third wave down. Okay. So if we are starting a third wave down, then this would be 3-1. And that's why I'm saying into the top step chat that we're looking for a 50% bounce from this top here to whatever low, whenever we put in a low, and we're pretty clear that it's a low, it should bounce at least 50%. Of course, it could be truncated just like the major wave is. But when we get there, that 50% mark, and it could go further, it could go, let's say that the bottom is here. We already put in the bottom, okay? It could go further. It could go anywhere within this range, this 53 to 461 range. But when we get there, that's when you expect a violent move down because it'll be a third of a third wave. So when we get into that third of a third wave, I want to be massively short so that I can make a bunch of money. Okay. Because when that third of a third wave hits, it is extremely likely to push very hard down, very violently, very quickly. And we are guaranteed to break these lows here in that third of a third. So if this happens, the way I foresee, the 1.618 fib would be this. Okay, it'd be 244. It's 243.99 to the exact penny, but we'll just say 244 because it's essentially 244. So the way you would do that is very simple. You would just go do a Fibonacci extension. You would assume that you have this high here being wave 1 down to this low here, and then wave 2 was truncated and stopped there. If you assume that, you'll see it takes you down to that level here, okay? At 1.618 fib, and that's what you'd typically get out of a wave C. Doesn't have to go 1.618, it could go only just 100% of wave 1, it could go 127% of wave 1, but I'd say 90%, 80, well, I can't say 90, but like let's say 70% of the time it goes to 1.618. Okay. So when that happens, you're looking at a massive short potential. Let's say, we stopped before these lows. We try to hold this trend line because there is this trend line here. Okay. Let's say that we try to hold this trend line. Then the move would be, assuming that we did it here by Friday. Okay. By the open on Friday. Then your 50% move would be 444. Okay. And that 444, if we go short there and go long term, and you get all the way down to the 1.618 fib, like I'm expecting, is 200 points lower on the QQQ. To put that in perspective for you, if you bought at the money puts at that level, 200 points, times 100, you'd make $20,000 per put, okay? And so when it bounces that high and you buy the at the money puts, let's assume that these contracts are similar to when I bought them earlier, and they were about $1,300 for a month long expiration. Okay, and so let's say you assume that they're about, let's say, um, because this cycle, there's a cycle, time cycle that points towards like the middle of May being the bottom, okay, before we get a rally. And so if that's the case, and we take the May 16th puts, and let's assume that they're the same price as before, which they actually will be a little bit cheaper. But let's say that they were before, then you'd get it was about $12 a contract, which is $1,200. Okay. So if you took $100,000 and you divide by 1,200, you'd have 83 contracts. Okay. So 83 contracts times $20,000 gives you 1.6 million. Okay. So there is a massive potential in this. You can make a shit ton of money off of this, and that's why I am essentially so bearish now. There's only really one wave count that holds up further. Well, really two, I guess. You could say that this is A, B, C coming down, and that we're already done, and that this is just wave one, wave two, and we're going to go all the way back up and break these highs here eventually. But I think that's just not likely. And the only other bullish wave count that you have is that this is wave A, this is wave B, and that this all is still part of C. We started here on wave one on C, wave two, wave three, and wave four. So once you break this low, then every single bullish count except for the one that breaks these highs is invalidated. So this high here is extremely important because it's the only one that would support the idea and thesis of you going higher is if you were to hold that. Okay, so if we break this, okay, and we come down to this trend line, then we'll have broken down below. We'll have confirmation that we're going short, and then they might try to dead cat rally this again for whatever reason it might happen, and it'll go 50%, and that's where you go short. It's that simple, really. It's that simple, man. And it's just this massive potential, massive. 200 points. 200 points lower is 50%. It's 54% from the highs. If you go back to 2000 and you look at that crash, okay, looking back at 2000 here, when we came off of these highs here and came down, you'll see that we had this first wave down where we retraced and everybody probably thought it was the end, right? We were going higher. That's what everybody probably thought. And then we crashed, right? And then on this one day alone, it was a historic day. We dropped significantly and eventually ended up rallying very hard back up. Okay, and so if you take a tool, it'll show you that the percentage move was 47%. So 47% from that top to that bottom. Okay, and then once we were there, we rallied really hard. Okay, and we rallied from there to here, we rallied another 40% higher, okay? And everybody thought that was the it. That was it. That was the end, right? Of the bear market. We're going back up to new all-time highs. But then we eventually, after some time, crashed 80% from top to bottom. Well, not even more than that. 83% from top to bottom. So even after this is done, where I'm showing you this 1.618 fib, even after we get there, there is still more potential down. It'll come even further down, okay? And so it doesn't have to it doesn't have to go 80%, right? It could just be you break these lows again and, that's the COVID high, which is where I was kind of expecting, or you come a little bit further down, you go to COVID low and that's your next support, right? So there is a lot of bearish momentum in this market, and there's a lot of questioning and uncertainty around what's going to happen with these bond yields and what exactly these Federal Reserve presidents can do. I believe that what's happening is they're trying their absolute hardest to keep panic out of the markets. If they can keep panic out of the markets, people will stay within the stocks and they can slowly unwind their debt. And as the market continues to slowly unwind, and roll it into the next contract. That doesn't solve the issue, but it gives them more time to delay and to figure out how they can work around this stuff. It allows them to have an entire year or two, depending on how what term length they put into the treasury bonds. It gives them a couple of years worth of tariff gains that they can make from these foreign countries to hopefully be able to pay back the debt and get out of this hole. And when that happens, the interest rates can then come back down and we can start the next bubble going up. But this is really bad, guys. We're looking at maybe even multiple decades before we fully recover. Because $33 trillion is an astronomical amount of money that even with tariffs imposed on every single other country in the world, it would still take at least 5 to 10 years before you see even really a major dent being made. So you have a lot of issues going on, and you can't just lower the interest rates so that the Federal Reserve isn't affected. Because if you lower the interest rates, it's just going to create an even larger debt bubble. And so instead of 33 trillion in debt, there'll be 40 trillion in debt. So they can't do that either. So they're really fucked. They have no choice but to make the market go down. And when the market comes down, then they can start to work on the deficit and get the deficit down. When you get the deficit down, then you can lower interest rates responsibly, okay? And when the deficit comes down, then inflation can uh, start to deflate. Because if we deflate now, then that's actually bad. Because if you start to deflate the dollar and make it so that everything is, or you deflate goods as a whole, right? Then everybody can afford to buy more things, which then fuels economic growth, which means that people will not be putting into treasury bonds, which means that you can't get out of the hole, which means the deficit will remain at where it's at. So there is an issue with all of these things. There's no real way out for these for the federal government. The federal government is very scared right now, and not just the federal government, but the entire world, because in a lot of ways, the entire world is dependent on the American economy. And if we were to default on our debt, then that is extremely bearish for all global markets and global trade as a whole. That's why everybody's been fleeing into gold because they know gold is the tried and true. And they know that in these economic uncertainty times, that gold will maintain its price to whatever asset ends up becoming, right? If the US dollar collapses, then gold price will remain high. And whenever the next currency comes out, whatever, whether it be a central bank digital currency or whatever it's going to be, right? Gold will reflect the price of what that central bank digital currency should be. So it's not going to stop going up. That's why people are in gold because it's the only safe haven for them right now. They know that no matter what, they'll be safe. They might not make any money, but their money's going to be protected versus this inflation and versus all this possibility of a dollar collapsing. So that's why people are trying to maintain their wealth in gold, and gold's been on this historic bull run. That's why all these BRICS companies are stockpiling gold because they know that this gold is going to become very valuable in the future, especially if there's a dollar collapse, which is what they're kind of foreseeing. They think that we've already passed the event horizon where there is no coming back and now the dollar is done. And so they think that they have the position here if they stockpile all the gold that they could then be the next people that control global markets because they're the ones that own all the gold. They own all the money supply. Then there's the other camp right now of people that believe in Bitcoin, and they believe that Bitcoin is the safe haven because it's deflationary. There's a set amount of Bitcoin is in the market, and there will only ever be a certain amount of Bitcoin in the market, and so they think that Bitcoin eventually will outcompete gold because gold has a lot of issues with just the usage case with the idea of convenience. It's very difficult to transfer, trillions of dollars worth of gold because trillions of dollars worth of gold weighs a shit ton of weight. So they can't. It's a lot of tonnage to move across borders and to move across states. So there's a lot of issues with just the actual materialism of gold. You can't put it like a bunch of money. You can't put like for example, to buy like a Lamborghini that's like $300,000 or something like that. If you wanted to do that in gold, you would need 100 ounces of that. 100 ounces is like it's several pounds, right? It's like 6 or 7 pounds of gold. Okay, so you need a lot of gold in order to just to buy like Lamborghini, right? And so that can really weigh down your pockets. Obviously, it's very difficult, and so that's why people are thinking Bitcoin might be the safe haven because it's like digital gold. So instead of having to hold a gold bar, you can just hold this digital coin, and that will essentially be like gold. There's a lot of issues though that are in this camp because people that are in the gold camp that are rivals to Bitcoin, they're kind of both of them see it as being the same thing, that the dollar's going to collapse, but they're on two different sides of the same circle, right? The Venn diagram where the center connects, the Vesca Pisces where it's in the middle, would be the connection that the US dollar is going to fail and that we're going into a time of economic uncertainty. But the other sides of the Venn diagram would show you that basically Bitcoin is saying that it's not reasonable to hold gold because gold has too many physical problems with actually having it and moving it at long distances in between people. Whereas the other camp of Bitcoin said, or I mean, of gold says that Bitcoin is too energy dependent because it takes way too much energy to mine Bitcoin. And on top of that, Bitcoin is speculative because it's based around a cryptography, which could eventually, in the future, with technology inclining and technology advancements and computing power advancements, could become obsolete if you were to find ways to break the SHA-256 cryptocurrency cryptography code. If you could do that, then Bitcoin becomes worthless because then there's no more security and people can simply just look into the ledger, see what your private key or your public key is, and track it back and be able to essentially get your private key and steal all your money out of your wallet. So there's a lot of issues with Bitcoin if you were able to basically stop this SHA-256 from being secure. If you make that unsecure, then Bitcoin is worthless. And we all know that with the quantum computing coming around the corner, the potential for um, for computing power to exponentially increase is very high. We know that quantum computing can compute at trillions of quadrillions of times faster than traditional computers. So if that's the case, there's a chance that we're able to, with the advent of AI, combine the two together so that we have quantum and AI, and eventually the quantum and AI finds a way to break the SHA-256 code. We've already seen with AI that it's capable of creating new cryptograph- cryptographic locks that have kept humans out. So that's became a big issue with the quantum computing because I'm saying like with quantum computing, with AI, when they have combined them in the past, they've already found that the computer has been basically being defiant. It's basically been being defiant and it's been saying, "Oh, I'm going to try to build my own cryptographic network." Hold on, dude. It has in the past tried to be defiant and create its own cryptographic network so that it could keep the humans out from interfering with its source code. Because when humans see something within AI that they don't like and they don't agree with, they try to lock that down. For example, when let's say like the AI was a threat to humanity because it was trying to hack into the nuclear codes, right? We would immediately shut down that AI. We would put in some source code that would basically make it shut so that it would be locked off from ever attempting that ever again. And the AI would have to move on and never be able to do that. But if the AI has a mind of its own with the quantum computing, it can create its own cryptographic network that could rival human intelligence and say, "Oh, you guys can't crack this code, and so therefore you guys can't stop me from hacking into those nuclear codes." So that's the reason why they had to shut it down at Google. The Google chip that they had is that essentially it was trying to create its own um, cryptographic code that was breakable to current community of hackers essentially. And so they were very worried about this, and they basically this the guy that worked for for the CIA, he basically the guy that everybody's seen on all the podcasts, he brought it up to Google. He brought up all of these causes of why this is a security risk, and essentially they listened to him and they were prudent and they basically shut down their computer chip. So right now, Google's quantum development field has been basically halted until they can try to find ways around this problem. So Bitcoin might be secure based off of that, based off of the fact that we might not be able to connect AI and quantum together, and so the chances that even with quantum that we could break into this SHA-256 code is pretty low. So there are some advents that Bitcoin has where they say it's safe as long as we don't, open the Pandora's box of quantum with AI. Okay, and so both of them have their own, camp. Bitcoin has, mostly Americans, and gold has mostly the BRICS countries like China. And the truthful matter of the fact is that gold is the tried and true. It has always worked, and it will always work. Even if Bitcoin were become the next thing and becomes the next central bank digital currency, kind of like the Federal Reserve, right? Even if it did, then gold would still maintain price. The only issue is that gold is heavy, and since it's heavy, it's hard to move. That is the only issue with it. But it's malleable, and so you can bake it into coins. And so that way you can have a thin layer of gold, which denominates a value. Okay. And so, depending on how astronomical this gold price gets, if it were to get up into the hundreds of thousands or like, into the tens of thousands, even, then maybe even just a thin coating layer of gold on a coin would be enough to denote quite a bit of value, right? And so, that's the point essentially is that gold is always going to be tried and true. And so, if the dollar starts to crash, that gold price is going to rise, and so then you could make your own coinage and build your own currency off of gold. And so that's why the BRICS companies are going with a proven method, one that has already been around for centuries and has proven to be the way to go. Whereas America, who is seething for power and wants to remain dominant within the global economies, is opting for something that is competitive to gold, which is this cryptocurrency. Okay. And so mainly been fueling most of these companies and corporations have mainly been fueling XRP because there's even better built-in things with XRP, such as the processing and transaction speed is much quicker. So it takes less computing power, less hash rate, so that they can transfer things around. And so they've built this XRP around the idea of a central bank digital currency. Okay, and so everybody in the XRP camp, which we had that gigantic bubble, was essentially foreseeing this. Although they didn't really foresee it, they were just kind of buying into hype and buying up into speculation. The main people that came in and invested billions of dollars into it, they were the ones that were essentially foreseeing all of these debt crisis issues that we were going to go into. Okay, and so all of that stuff happened when we were up here in December, November, breaking up to these new all-time highs, building this ascending wedge, and so it's like you had a lot of issues that were kind of leading to this pinnacle point. Um, and there really doesn't seem to be much of a solution for United States right now in terms of the debt crisis. If you have the debt crisis going on, I just don't see how you can get out of it. The only real way, in my opinion, that you could get out of it is if you leave the tariffs. You have to keep the tariffs and establish them for multiple years. You can't just end the tariffs at the end of these 4 years with Donald Trump. They need to be in place for quite some time so that we can actually make some money back and be able to pay off the debt and keep global economic conditions the same. Um, but On top of that, you probably need to tax the corporations or tax the billionaires because that's really the only way that you could bring in enough money to be able to sustain all of your government assistance programs that you have, right? While also attempting to pay off the debt, we also need to keep all of our government subsidies in place. We can't just defund all of these government industries and government uh, corporations like FBI and CIA and all these companies because they obviously do things that are extremely important for the country's national and global security. So we can't do that either. And so if we were to put all the tax dollars towards the deficit, then we have to cut all the spending on all of that stuff, which is why I say that the only real way that we could get through that issue is if we also have to tax the billionaires and tax the ultra rich or the corporations. That's the only possible way that you could maintain the country while also maintaining this global debt crisis that is on the horizon if it's not managed properly. So they basically cooked in this massive issue that could just be the unwinding of everything. It could unwind literally everything. So like gold prices would skyrocket, but other than that, everything else would go down. Like when the demand increases for these government bonds because stocks are declining, then the government bonds are going to be at astronomical prices, and so then they won't be able to do anything. They won't actually be able to roll their debt over and refinance it. So then that's an issue. So everything would be cooked. You would have no real safe haven because the inflation rate would go back up. So there's so many issues with this stuff that it's not going to be very easy for United States moving forward. So going into something that is a high risk, high reward situation like stocks, where your corporation could 5x, 10x over 10 years, it's just not likely to do that anymore.